Three Arrows Capital, also known as 3AC, has now gone into liquidation. This has had a major effect on the already bear market. Bitcoin has dropped to $19,000 because of many recent announcements and the current economic crisis the world is now facing, with an 80% likelihood of a recession. The fear levels are now at extreme fear. Hey everyone, and welcome back to some more juicy news here on Crypto Juice. Today we're going to be talking about the recent Three Arrows bankruptcy and what this means for the future price action of crypto. Be sure to stick around to the end of the video as it's full of very informative news on what's going on with the crypto markets after some major news has just hit the internet. So, what is Three Arrows Capital? Three Arrows Capital, also known as 3AC or TAC, was a Singapore-based cryptocurrency hedge fund which was ordered to liquidate on the 27th of June 2022 by a court in the British Virgin Islands. It was founded in 2012 by Kyle Davies and Su Zhu. In its last public statement, the fund claimed a net asset value of $18 billion. Blockchain analytics firm Nansen estimated in March 2022 that Three Arrows managed about $10 billion in cryptocurrency assets, although there is speculation that most of their visible assets were sourced by uncollateralized borrowing from various lending platforms. The firm backed projects including Aave, Avalanche, BlockFi, Deribit, Ethereum, Polkadot, Solana, and Wu Network. According to a January 2021 SEC filing, Three Arrows owned almost 39 million units of Grayscale Bitcoin Trust at the end of 2020. The firm invested approximately $200 million in Luna tokens in February 2022. In April 2022, Bloomberg reported that Three Arrows was planning to move its headquarters to Dubai from Singapore, although on the 24th of June 2022. Dubai's regulator confirmed that Three Arrows was not registered with the Dubai Financial Services Authority. Cryptocurrencies experienced broad declines in mid-2022. Luna, in which Three Arrows had invested, fell to almost zero in May 2022, though it is not known how Three Arrows fared. On the 30th of June 2022, the Monetary Authority of Singapore said it had reprimanded Three Arrows for breaching its allowed threshold of having no more than 250 million Singapore dollars in assets under management, a condition of its August 2013 fund management company registration. Three Arrows was further reprimanded for providing false or misleading information to Moss, and failing to notify Moss of changes to directorships or shareholdings. On the 16th of June 2022, the Financial Times reported that Three Arrows had failed to meet its margin calls. On the 22nd of June, the Wall Street Journal reported that Three Arrows had failed to repay money lent from cryptocurrency broker Voyager Digital. On the 27th of June 2022, Voyager Digital issued a notice of default against Three Arrows for failing to make the required payments on a Bitcoin and USD coin loan worth more than $665 million. On the same day, a court in the British Virgin Islands ordered the liquidation of Three Arrows Capital, overseen by Teneo, according to Sky News and The Wall Street Journal. The fund filed for Chapter 15 bankruptcy to protect its U.S. assets from creditors. The fund was also reportedly starting to consolidate its NFT holdings, in a possible attempt to sell them and cover its losses. It had amassed a large collection of non-fungible tokens, NFTs, last year, such as ones from the Fidenza and Ringers NFT collections, and secured a poetic beach by the Chinese digital artist Dai Beiyuzhou at Sotheby's with a $140,000 bid. In the run-up to Wednesday the 15th of June, the Three Arrows Capital NFT fund, Starry Night Capital, had reportedly moved its entire collection from the NFT platform Super Rare. A total of 70 NFTs. Three Arrows Capital had spent more than $21 million building up since August last year. Kyle Waters, analyst at Coinmetrics, a crypto market analysis firm, said, "All of the super rare works were sent to a single address along with pieces from art blocks, Known Origin, Foundation, and other crypto art projects. The new wallet seems to have some linkage to other 3AC wallets, but it's unclear so far what's going on. At the worst case, gearing up for some sort of liquidation, OTC block trade of NFTs?" Kyle also said, "It's also unclear if NFT sales would even move the needle very much versus other positions." Now, let's talk about the price action of cryptocurrencies in enlightenment of not only the Three Arrows Capital bankruptcy but also the current economy and other firms having an impact on price action. Information sourced by Coindesk.com. Bitcoin slumped over 37.3% in June, the biggest monthly price drop since 2011, in an epic market sell-off that triggered job cuts across the crypto industry and forced many lenders, including Celsius, to halt withdrawals and scramble to line up financial lifelines. The largest cryptocurrency by market capitalization ended the month at $19,925. Jeff Dorman, chief investment officer at Akka Fund, said that this was one of the worst quarters on record pretty much everywhere across the equity market, across the bond market, and across a lot of different places. Investor fears over steep U.S. Federal Reserve interest rate hikes were a key catalyst in Bitcoin's price plunge as the Labor Department on June 10 released a report on the Consumer Price Index, CPI, the most widely tracked benchmark for inflation. The CPI showed that inflation rose 8.6% on a year-over-year basis in May, the fastest in 4 decades. On June 13, Bitcoin saw its biggest single-day drop since March 2020, falling 16% to $21,910. 2 days later, the Federal Reserve increased interest rates by 75 basis points, or 0.75 of a percentage point, 3 times the Fed's more typical increment in recent years. Bitcoin mostly maintained a $20,000 price level through the remainder of the month but dipped this week to around $19,000 after the Fed renewed inflation warnings and the news being released about 3 Arrows Capital going into liquidation. Bit Bull Capital, a crypto fund management company, anticipated a Bitcoin breakdown in June with $17,000 to $19,000 as an important price range, noting that the cryptocurrency also struggled in June and July of 2021. The crypto fund expects the token's stability to be retested in the coming weeks. A successful retest appears likely at this time and could set the base for a gradual recovery spread over a few months, BitBull CEO Joe DePasquale told CoinDesk in an email. A breakdown from this range could see Bitcoin trading between $13,000 to $15,000 and could send the market into a spiral that may require a longer period of time for recovery. According to data from Crypto Compare, total crypto fund assets under management, AUM, fell 37% during the month to $21.6 billion. Bitcoin Fund's AUM fell 34% to $15.9 billion and saw average weekly net outflows reach an all-time high average of $188 million in June. "I think we're definitely closer to the end of that liquidation cycle," Dorman said. "Those still left in this industry seem to have healthier balance sheets. The lending and borrowing and leverage is lower. Most funds you talk to are 50% cash, so I think the leveraged washout is probably coming to an end." Some analysts, such as Joe Orsini, chartered financial analyst and director of research at Eaglebrook Advisors, are optimistic that Bitcoin will eventually rebound. "These are growing pains," Orsini said. "Ultimately, we look back at history and it's experienced a number of drawdowns, but each and every time it has resulted in new highs. So history doesn't often repeat itself, but it often rhymes, right?" Most altcoins ended the month in the red despite occasional gains. For example, Polygon's Matic token surged 25% in the 24 hours after its development team expanded private voting in decentralized autonomous organizations, DAO, with Polygon ID, but still saw over a 20% drop over the course of the month. Crypto lender Celsius Cell token faced a steep decline in mid-June, falling over 50% within hours of announcing that it was halting withdrawals amid extreme market conditions. The token saw an intraday spike on June 21 in a supposed short squeeze that boosted its value 8-fold, but Cell is now trading closer to its early June levels, ending the month down 24% from June 1. Coinflex's Flex token saw a similar pattern after the crypto derivatives exchange paused withdrawals on June 23. Flex dipped over 65% in 24 hours. As of June 30, Coinflex has yet to resume withdrawals, its token price down nearly 40% in June. Dorman criticized centralized finance exchanges, CEFI, including Celsius and Coinflex, and said that investor confidence should be gone from those institutions. The story should be about the DeFi platforms that have worked in service to their customers admirably and without issue, while their CEFI counterparts like Celsius have blown up, Dorman said. Ethereum was also down 45% in June, trading at $1,060. So we have yet again been hit by a further dip in the crypto market. Here on the Crypto Juice channel we expect this negative price action to persist for a long time. Simply for the reason that we are currently sitting at an 80% likelihood of a recession that is imminent. Inflation is happening and all the other things that are going on in the crypto world at the moment. However, as always, we are not worried. As we have stated a couple times already on this channel, we see this major bear market price action as a great opportunity. Sometimes you have to zoom out and realize this bear market won't be forever. The bull run may be some time away, but it will be here again sometime in the future. Not financial advice, of course. Please do your own research and only make financial investment decisions from the advisories of a qualified professional in the financial sector. Our videos are for entertainment and educational purposes only. So, that about wraps up today's video. As always, thanks for watching. Drop a like if you enjoyed and be sure to subscribe for more juicy, daily crypto news. Comment down below what you think. And I'll see you in the next one.